અને ત્યારે જો આ ફેડ પર વધુ વાતચીત કરવા માટે XM.com ઓસ્ટ્રેલિયા CEO Peter McGuire આપણી સાથે જોડાઈ ગયા છે. Very good morning, Peter. Welcome to the show. First of all, like we have seen and the whole world was awaiting that in this policy we would see a 25 basis point the rate hike. But after this, the guidance was very important. The commentary was important. First, what was new about the commentary this time compared to last time when Jim Tillen had raised the interest rates, and how do you see this?
Well, good morning, and thanks for inviting me on the show. One word that really came to my interpretation of Ms Yellen's speech was gradual. And she said that word a number of times. And so when you hear gradual, you realise that it's a moderate growth over the extended period, and they're going to be introduced gradually. So I think that if we see 3 rate rises this year, I think that'll be pretty much on the money. And stretching forward, overall, the economy is doing quite well. I think you're going to see continued growth, certainly in this bull market as far as equities. I can't see a handbrake on that naturally. And overall, unemployment numbers, they'll be revised probably up from last Friday night's non-farm payrolls. The US economy is a strong economic powerhouse. Hopefully that can be washed across to other markets, example Europe and so on. I noticed the Indian market at record territory, so that's done very well over the last matter of a year or so. And that gradual uptake is only going to increase. Energy prices are contained, food prices are relatively cheap in the long run. So in turn, all of this needs to be factored in.
Okay, Mr. Peter, good morning. The thing is that after the increasing rate, the market anticipate the moreover the hawkish stance from the Fed. But after the speech, we've seen the accommodative stand from the Fed chairperson. What is the reason behind that? These are the accommodative stands. Even we've seen the crude prices and currency prices are moreover stable level. Which are the major factors you've seen in turnaround in US economy?
Well, you know, when we look at unemployment numbers, that's the first point that needs to be considered. That people have actually, they go to work, they've got work, and they've got something in their wallet or purse. Secondly, is it being exorbitantly paid for as far as fuel and energy costs? We're not near those high dollar value crude prices that we saw in 2008 of $150 a barrel. We're now at $50 a barrel. So it's far more affordable in the sense of transportation costs and mobility. Food prices, we haven't seen massive run-ups. In actual fact, the grains and agriculture and meats are relatively cheap. The input costs, soybeans and so on for food. And then you take that across as far as the US dollar. We've seen a very strong rally for that US dollar index. The Dow's been, you know, at 21,000 plus. And then you think of where the overall economy is, inflation's under control. So in turn, Ms Yellen has a lot of favourable and good points to discuss. Three rate rises in a decade. We've had, everyone understands how the GFC affected white collar and certainly the US economy as a whole, housing and so on. So that resurgence has been strong, and now under the leadership of President Trump, he's going to assist in probably rebuilding the nation from an infrastructure, which in turn is going to be supportive for a lot of nations, from energy production and of course base metals and every component that goes into all of those ingredients.
Peter, how do you see the dollar index moving in like next couple of quarters now? Because the guidance is pretty clear that they said that gradually they would hike the interest rates up to like 2% almost by the end of 2017, and then gradually they would have 3 rate hikes in 2018. So where do you see the dollar index? Do you see the dollar index stabilizing, or maybe like in one quarter, all the news will factor in, the rate hikes would factor in with the dollar index, and there would be a great stability in dollar index? Do you believe that?
Well, I wouldn't be surprised. I mean, you know, that's had a big run up, and I think it'll probably hold around these levels against the rupee. I'd say, you know, that 65 to 68 trading range. Gold was an interesting point last night, and it's had a nice rally. So I take on board, you know, as far as US dollar, interest rates traditionally going up, it should be supportive of the dollar and push it a little bit higher. Let's just see where the euro trades, what happens as far as UK economy, and overall I think that fundamentally the US dollar will probably just trend higher over the next 12 to 18 months, quite simply because of those rate rises.
Okay. Regarding on economic front, Peter, there is two questions. One is that GDP estimated it's around on 2.1 is continuous on 2018, and we've seen the bond market is not much more happy with the interest rate guidance. And the second thing is housing market, how affect after the interest rate rising, because of we've seen the prices are rising but supply is still short.
Well, if we're talking about US housing, yes, of course, net migration and quite simply, the amount of families, people wanting investments. We had a market that was totally sold off, and we've seen a resurgence. Investors have piled back in, and then moving forward, you've got that construction boom, and it's been a very strong, probably 3 to 4 years, that whole sector. That will probably continue, and there just seems to be strong building booms across the world. I mean, Mumbai is a classic example. There are cranes everywhere and that huge construction. Asia is the same. Moving across the Middle East, all you see are cranes. And then somewhere like Australia. So population boom, people need housing, and that storyline isn't going to go away. And energy consumption, from electricity to crude oil to all of those inputs. So I think overall you're going to see a stronger growth across those sectors, more demand for base metals, wood, you name it, it'll all come into the firing line, and overall it's a stronger GDP.
All right, Peter, because we have seen during the presidential elections, Donald Trump has never ever, they said that Fed has never really done a very great job, and he's like Janet Yellen is not really working in favor of the country. He has made such statements during the presidential elections. Now that the Fed rate hike has come, and she has also said that 2018 the guidance has been given. How do you think it will go with Donald Trump's policies? Will it actually contribute to the growth, to the policies he is looking forward to?
Well, when you examine President Trump, and many politicians by nature certainly say things and promise things before they're elected, and then after they're elected it's a lot harder to get those processes in place and move forward. He did, for an example, say that he didn't believe the non-farm payrolls numbers while he wasn't in power, yet on last Friday night he applauded them and said that they're true numbers and they can be believed. So his agenda naturally is to try, from an infrastructure spend, regain that competitiveness of America, rebuild highways, roads, you name it, hospitals and bridges, and just get the country back on track. I think a great consideration that he's certainly worried about was the amount of money that he spent on, the US economy spent on wars, going back from 2000 onwards to about 2012. And he saw that, if we would have used those $6 or $8 trillion more effectively internally, it would have been a benefit to America. So I think that answers that reasonably. And he's looking, like any politician, they look for their second term to be elected, same as Modi, that they want to see how they're going to perform in that first couple of years. He's got to really hit the ball out of the park in a lot of ways, and then gain the momentum to be re-elected again. So I think that that's his agenda, and he's got to really deliver. I mean, these guys have got, he's got a party around him.
Policies, he has said. Okay, and lastly, do you just believe that because every rate hike, the markets fear the rate hike whenever the FOMC meet is there. But this time, it looks like all the markets are cheering the rate hike. Is there a particular reason behind it?
Well, I think they're cheering because it's been a long time coming, and we haven't seen successive rate rises, month on month or every 6 months. These have been long-winded events, and the market is accepting. We've seen a strong uptick as far as where the Dow is, what's going on as far as unemployment numbers. Everything is supporting it, and the market is aware of it and taking on board and inhaling Janet Yellen's comments. They're gradual. We're going to see that movement up over the next year or two, and they're more or less, I think, realising that it's a normal business cycle and the economic cycle, and this is just a course of events.
All right. Thank you, Peter, for all the inputs you have given us on this show.
Thank you.
તો જે રીતે આપણે જોઈ રહ્યા છીએ કે અહીંયાથી જે ફેડમાં જે વધારો થતો જોવા મળી રહ્યો છે વિક્રમ, એ ખાસ કરીને જેટલી પણ માર્કેટ છે ઇમર્જિંગ માર્કેટ્સ એના માટે પણ પોઝિટિવ પણ થતો જોવા મળી રહ્યો છે. સાથે ડોલર ઇન્ડેક્સ ઉપર તમે નજર કરો, જે અહીંયાથી એક ફિયર બની રહ્યા હતા માર્કેટ્સમાં કે જેટલી પણ ઇમર્જિંગ માર્કેટ્સમાં આપણને તેજી આવતી જોવા મળી રહી છે, એમાં થોડીક અડચણ આવી શકે છે કેમ કે ડોલર ઇન્ડેક્સમાં આપણને 103, 104 સુધીના લેવલ્સ દેખાઈ શકે છે, પણ એ થતો નથી દેખાઈ રહ્યો. એના સામે જેટલી પણ કરન્સીઝ છે તે ગેઇન કરતી જોવા મળી રહી છે. એક મેજર પોઝિટિવ અહીંયાથી બીજી ઇમર્જિંગ માર્કેટ્સ માટે પણ તો જોવા મળી રહ્યો છે.